Welcome back to Stock Market Weekly. This is your 20-minute show that catches you up on all the notable moves across financial markets. I'm your host, as always, Evan Medeiros. We publish these shows every Friday, so make sure you are subscribed to the channel so you never miss a market update. Thanks for tuning in. Thanks for being here. Again, here's what I got in store for us this week. So we had the jobs report out on Friday. Numbers were fairly consensus, but I think really the takeaway from the jobs numbers that we got today was that December is in play. December odds of a rate cut increased this Friday. So it seems very likely that we're going to get a rate cut to close out a blockbuster 2024 year. That Bitcoin consolidation we talked about last week, that led to a breakout. Congratulations to the bulls here. 100K six-figure Bitcoin is on deck, trading slightly north of it into the close of the week. We also saw yields continue to kind of grind lower here. I think net positive as well. Semiconductors and Technology, though, they got a notable bounce this week. So we've been a little bit kind of glass half empty, kind of bearish on tech and semis just generally, but they sprung back this week. We're going to look at those stocks. Meanwhile, we have oil testing the lower end of its recent range. So lots to talk about. Stick around. Let's get right into it. All right, let's kick things off here. Warden TC2000, that is a charting platform we use throughout these videos. It's a platform we support here at The Trade Risk as well. So if you are a TC2000 user, check out our website, thetraderisk.com, and see if we can be of assistance to your trading. Now, let's get into the numbers here. You can see a pretty mixed result, but a shining performance out of the Nasdaq 100. So the Dow and the Russell 2000, those were your negative red spots. In fact, most sectors were in the red this week, but Nasdaq, that was the big performer. If we take a look at the volatility indices across the board here, we lost about a point across the board. Nasdaq fall around 15.17. That's extremely low for the Nasdaq. VIX down at 12.76, also extremely low. Now, if we take a look at those sectors we were just referring to, there were only 3 in the green this week. So this was not a big broad rally of industrials, financials, and all these things that have been working over the past couple of weeks and months. This was a fairly concentrated consumer discretionary tech and communication services. Those were the heavyweights, and they were up sharply. That's the thing. They weren't just mildly in the green while most things were red. They were convincingly in the green, up 3 to 5%. Now, if we take a look here at our sector trends, we didn't get a tremendous change here across signaling. We started to get a bit of a breakdown here in materials on the right-hand side, middle column. We do see energy rolling over as well. This is our smart trend filter indicator. It measures price and volume spanning over time with some price action rules. And everything else is kind of still choppy to bullish, right? So we're not quite getting the breakdown in trends. We're not getting big reversals yet, but we are just seeing a little bit of softness out there. If we take a look at our market breadth screen here, you can see that 52-week highs, 52-week lows still looks pretty good, all things considered. We did a slight tick up here in number of stocks hitting 52-week lows on Friday, but generally speaking, this ratio is still something I'm happy to see. We're still getting more stocks dominating the 52-week high list than we are on the 52-week low list. This is what I wanted to show though here. So, some of this theme that we've been talking about in terms of Russell 2000, right? We've been very kind of bullish, outspoken that was the place to pay attention to. And, if we look at our relative strength factor layout here, which is available on our website for TC2000 users, this top left chart is the Russell 2000 expressed in SPY or relative to SPY. Russell 2000 divided by SPY. And you can kind of see that for the last couple of weeks here, we've been kind of trying to make the turn, right? This is part of what's illustrating this this kind of concentration here that I've been talking about in small caps. You can see it there. Take a look at semiconductors, right? Even though this was a negative week for small cap and a positive week for semis, you can still kind of see here that semis have been kind of underperforming. They've been a little sluggish here. They're kind of in the penalty box. And so this ratio is something that we want to continue to keep an eye on. It was kind of counter trend in both of these markets this week, but something I figured I would point out here to illustrate the point. Now, let's take a quick pit stop. Let's thank our sponsor, Investors Business Daily. Shout out to them, IBD. They help make the show possible. This is the top 10 on their IBD 50 list. I update it, try to update it every single week. And you can see they had some big winners this week. Palantir at the top. And let's see if I have this sorted correctly. I think this is their rank 1 down to 10. But Palantir on here as along with the other stock that I was looking at earlier, CLS. Yeah, CLS here at the top of the list, up 11%. So some big winners. Check out IBD. We have a link in the description of this video. You can get access, curate this, winners list, leadership list, IBD 50 list for yourself every single day. Now, let's keep it moving. Let's go to our macro slide here, and you can see that the dollar is still, very stubbornly strong. It hasn't quite rolled over. It's certainly stalled out. But if we look at the 10-year on the bottom right, you can see that the 10-year treasury yield is, more of in a rollover state. And this is, I think, a positive here for lots of different areas in the stock market. Those rate sensitive sectors, small caps, generally speaking, are going to benefit from those lower interest rates. And you can see that's starting to cool off a bit. I think that's good. The dollar, on the other hand, though, stubborn, and it was up marginally this week. Yields were down, dollar up, Bitcoin up pretty nicely this week. Again, like we talked about at the top of the show, over 100K. IBIT was up about 5% this week. Copper was up, silver was up, gold and oil both down. We'll talk about those in just a little bit. So let's get into some price action here. Let's start it off with the S&P 500. And you can see that this grind higher continues here. So weekly chart, let's actually go there first. Last week we broke out, right? We had new closing weekly highs here for the S&P 500. This week we are continuing that grind higher. Life is good for equity market bulls right now. There's not a worry in sight, right? And I'm being a little facetious there, but we will pay our dues eventually for this nice uptrend, but it just doesn't seem like it's right now. Maybe, in the next month or so, we'll start to worry when some of the reality hits in. But I think seasonally and just structurally where we are right now in markets, there's just this nice kind of drift complacent. Let's not, spoil a good thing right now, and the market is just drifting higher. So S&P 500, it's getting extended. We can see the, maybe the warning signs that are building. They're just not in here yet. So where would we start to manage risk? Where do we start to get concerned? I would say we're looking at basically the prior November highs here around 6,010, right? 6,000 even. That's probably where you start to, get a little concerned if the market starts to roll over, if some event hits it, and we can start to manage risk against that. Otherwise, we're at all-time highs and we're continuing that grind higher. The Nasdaq 100, I think, is the more impressive story here because we've been talking about this being the lackluster kind of just underperformance on a relative basis. And it played a lot of catch up this week. Mag 7 stocks generally, Apple was the top of the story headline last week for us. That broke out, Meta broke out, Tesla broke out, Nvidia started to reclaim support. There was a lot of favorable action there. Amazon as well. So we'll look at some of those individual charts in just a little bit. But all of those things combined really sort of helping fuel and catalyze the cues to new highs here. So the Nasdaq 100 coming back from the dead, extending its gain, leading on the week here, and on the week here was up 3.28%. So it's starting to really, kind of play some catch up. Russell 2000, not quite getting that same enthusiastic push up. Still technically looks pretty strong to me. Still technically looks like it's kind of flagging out and consolidating here. If we throw in a weekly chart and we look at this big picture, right? I still like the look and I like the prospects here of the Russell 2000, but we got to give it to the Qs. They certainly won this week of trading. So that's the big picture. That's what I got in terms of the major markets. Let's go to oil next. So if we look at oil, this is starting to look a slightly concerning here. I mean, it's still in this big consolidation pattern here. You can see it's kind of just, wedging higher highs, lower lows, and lower highs, higher lows, and it's sort of creating this nice little compression, this triangle. It's back down to the lower end of support here. This is where dip buyers have been stepping in. This is where you want to see them step in. If they don't, and we start rolling over and cascading to new lows, then we have some problems into the end of the year. But oil looks like it's still just pretty much in this containment pattern, but we do want to keep an eye on it as it gets closer to a critical kind of level here. Let's go to Bitcoin next. So if we look at our Bitcoin slide here, we can see that we are now looking at 6 digits for the old price of BTC in United States dollars. And this consolidation, it was, really moving kind of sleepy over the past basically 2 weeks worth of trading. It was going sideways, call it in between 99K and 92K. And it finally made its move on Wednesday. When no one was looking on a Wednesday night, prices started to kind of melt up and squeeze and really sort of cascade a lot of potential, shorts that were in the market here and really kind of squeeze over 100K. And then we had this big range, and this chart is a little distorted, but we basically had a 12% single day for Bitcoin on Thursday, which really sort of wicked us all the way back down to 92K, kind of liquidated a lot of the levered longs, previously liquidated all the shorts, and really sort of just frustrated and kind of pissed off all the short-term traders. That is the problem, or it's not the problem. It's a problem if you're a short-term trader, but it's a market dynamic that's been in play here for Bitcoin for a very long time. It's perpetual futures. That's how everybody gets their leverage on all these different exchanges, and they get run. I mean, the stops get run. I mean, market makers and the sharp traders know where those liquidation points are. When we start to get over 100K, we get lots of folks that are getting squeezed, and so the game gets played. So keep in mind that the numbers are getting bigger, the dollar amounts are getting bigger, but if you think in terms of percentages, I think that'll keep you in track on how you're sort of judging or making your move. So Bitcoin continues to do well. It's extended, of course. The chase is on. We're still in the same state where dips are getting bought. Momentum is strong in this market. If we were to throw on Bollinger Bands on any of these charts, you can see, let me switch over to here. If we throw on Bollinger Bands for IBIT, for instance, weeklies, you can see we're back above it after a quick pause. And same thing with the spot Bitcoin price. So we are extended, it's frothy, it's chase mode, and it's making people certainly pay up at this time. Now, a couple of weeks ago, we were talking about Ethereum as being another sort of crypto asset here that was getting some love or had some potential to get some love. And this is now getting its love, right? So Ethereum here is going out at all-time highs for the ETF itself, ETHA. This is basically tracking the approximate price of Ether, the asset. And this is looking good. We're starting to get people, really kind of moving outside the risk spectrum here in terms of cryptocurrency. First, it starts with Bitcoin. Then you start to, kind of migrate out the curve here as people feel good, as the potential, speculation comes in on CryptoZar and all the, easier policy that is to come with a new Trump administration. So Ethereum also breaking out here and doing quite well. If we stick around with that Bitcoin theme a little bit longer, Mara didn't do a whole lot this week, but we did have some crypto miners like Iron, which were starting to make some notable moves here, up 13%. Some big volume came in for this particular miner here. It's one of the top 3 bigger ones. What else? Coin starting to break back out now after a nice pattern. So Coinbase getting a little bit of a breakout and starting to move from this continuation pattern that it's been in for the last couple of weeks. That was nice to see. So just generally speaking, crypto, fintech in general has been working in this environment. Let's actually go to some other individual stocks. Okay, yeah, here we go. So if we take a look at some individual stocks here, these are some of the large cap stocks that were making some big moves this week. And like we talked about, Coinbase here was on that list this week. It was up nicely and technically just looking quite strong here and has a lot of favorable tailwinds behind it. But take a look at some of these others. So we had Tesla, which had a 13% week, and it had been kind of chopping around here, but this is really sort of just gearing up and kind of levitating back up towards those all-time highs. I wouldn't be surprised if we're ringing the bell here on new Tesla all-time highs before or around year end. Some of those fintech stocks that are continuing to perform here, something like a Block, formerly called Square, continuing to perform here, had been in the penalty box, kind of carving out a range here for the past couple of years. This is a current long holding in our Merlin trading system. We've already taken some profit, and we're just kind of trailing up a stop and letting this ride. We've been in this for a long time, so this is nice to see. Lots of these types of stocks, though, are the fintech type names are working. Financials generally are working, but a couple of these others is Palantir just continues to go vertical here. Had like a brief trade in this earlier in the year, but this has just been an absolute monster here, up 344%. Congrats to the bulls here, and continues to levitate. It's stretched. I mean, it's full on chase mode. And same thing, it's in kind of the same group here as AppLovin. This is another one that I don't think I traded at all this year, but it was up 900%. And this is, I believe, started as about a $15 billion company this year and is now north of $100 billion. So congrats to the bulls there. Who's trading this? I'd love to hear, because I have not gotten a piece of this. I saw this show up as a couple of setups briefly this year, but never ended up getting any type of fills. And then we also have some semiconductors here showing up on our large cap and moving up scans. Last but not least, Mag 7. Let's take a quick pit stop here. So Apple, that was the talk last week for our show, and this continued to move up 2.32%. That's all-time highs. But then if we take a look here at Amazon in the bottom left, you can see that up 9% to new all-time highs. If we take a look at Meta, you can see this up 9% to new all-time highs. And our friend NVIDIA. So I've been fairly glass half empty, kind of bearish on NVIDIA here, but it is getting back over this 140 zone, and that's kind of the level in line in the sand that I've been talking about. If it's above 140, then you got to give it the benefit of the doubt. If it starts losing or continues to lose 140, then you have that potential double top scenario. So right now it's chopping out, it's consolidating at highs, it's above 140, so just let that go. And you know, of course, we already talked about Tesla. So that is it, I think, in terms of individual stocks and market action I wanted to talk about. Let's finish it off here with some of the trading that we made in our trading systems here. So we've got 3 trading systems that we run, Lamerick, Merlin, and Galahad. They're all in the swing or slightly longer than the swing time frame. And you can see that we had 7 buys, 7 sells this week. So it was a pretty even race. Didn't really change too much in terms of exposure. And if we take a look at our exposure right now, you can see that we are getting a little bit of separation here, and this is semi-notable, is our medium-term system is very long in this market still. In fact, it's on margin, it's leveraged, it's 130% long right now. Our long-term system, 116% long. So there's no fear of risk appetite in both of those trading systems. But our short-term system is, it has raised some cash. So it's about 47% long right now. So the short-term system is kind of just picking its spots a little more carefully. It's not as aggressively on the long side, maybe looking for a dip to add some exposure. That's kind of the way these are all being navigated right now. Of course, we have free trials for these trading systems. We just published our November performance report every month. We publish I publish my net realized returns from my account, and you can read that on the November report. Merlin had its best month in I think like 6 years, so it was a very good November. So that is it. That's what I have for everyone this week. Hopefully you had a good week of trading. It's that holiday time where things wind down, and hopefully you get to relax a little bit. Markets seem to be in party mode, so enjoy the ride higher, raise those stops. Let's not get complacent, but it does seem like markets just kind of want to coast here, and tis the season after all. So that's all I've got. Thanks so much for tuning in. We've got links in the description of this episode, and I hope to see you back here next week. Take care.